Folks, great to have you here. Excited to be with you as we get a chance to look at Saudi Aramco. I was talking to one of my colleagues today. I kind of get geeked up on this. The very first client, so I spent about 11 years in academia. And my very first client that I worked with outside of kind of academic type roles or conferences, et cetera, was ConocoPhillips when they were fully integrated before they spun off their downstream business to Phillips 66 in 2011. But love oil and gas industry, and boy, this is the kingpin. This is, as you think about ability to produce and the volumes and the numbers, it is just off the charts as far as the size of this company and how much oil and gas and services, products, et cetera, that they provide. So excited to be with you to share this. And if you're not as geeked up on oil and gas, that's okay. The purpose of this is to show you how to use some tools to assess any company, whether that be your own company. It could be a company that you want to assess that maybe you're selling into. It could be a company that you want to compete with and kind of differentiate your products, et cetera. But want to give you some resources and capabilities. We jump into our earnings call lab where we get a chance to look at Saudi Aramco. So as we get going, I want to make sure some of these tools are working. First of all, make sure that chat box is open. In the chat box, it's going to say to, and make sure it's set to everyone so we can all see that communication. If you need a private message, one of our team members, feel free. If you're having a hard time with technology, you can reach out to Curtis or any of our Acumen Learning staff. But just to make sure it's all working, get it open and just type in where you're calling in from. It could be a city, could be a state, could be a country. I'm really hoping somebody from Saudi Aramco jumped on with us. We'd love to have you here with us as we get going today. Excellent, man. We got a lot of international. Good to have you here. Welcome, welcome. Good evening, I guess, for many of you. We're calling out of Salt Lake City, Utah, or a little bit south of Salt Lake City, Utah. We're excited down here just to the south part of what's called Mount Timpanogos. If you're ever familiar with the Sundance Film Festival, the north side of Mount Timpanogos is where you have the Sundance Ski Resort. That's kind of where that whole film festival, all that stuff started. Of course, we're about, about 40 minutes, maybe 30 minutes to Park City, et cetera. So we're excited. We're starting to get snow. And that means we got ski season coming up just around the corner. Well, it looks like the chat box working as we get going. Let's go ahead and jump in. There's a lot we're going to want to cover as we discussed Saudi Aramco and make sure we're comfortable with the tools and that we're going to help you assess publicly traded company. So let me go ahead and open a poll. I accidentally advanced the slide, and many of you already answered this, but I actually have a poll question. So let me launch that. Here's the poll question. When is this the first time you've attended one of these earnings call webinars? Okay, you should see the poll come up on your screen there. We do these every month, and let me kind of tell you the purpose of them. There's two reasons we have them. Number one is we have participants who go through our courses, our building business acumen, applying business acumen, decision-making, et cetera, business decision-making, that come to our course. And obviously, you come to a learning experience, you get a lot of value. I kind of call them a boot camp. You're getting a lot of information in a short period of time. Well, how do I take that information and use it and apply it? And one of the ways you can do that is the tools that we share in the course. They can come listen to earnings calls. It helps them to be more comfortable as they assess a customer, competitor, or their own company, et cetera. So every month we do these earnings calls as a way to a practice for anybody who's been through our course. Now, some of you may never been through our course, which is just fine. We're going to give you a tool. You don't have to go through our course and be able to do this assessment. So at the end of our program, I'll provide you a little workbook. It has two specific tools as well as a simple framework where they'll help you to do this assessment. So it looks like in our group, 55% of us are new. So welcome. 35%, excellent. Glad you're coming back. Actually, a little bit more than that, about 44%. So good to have you. And I recommend if you've just taken a course, do 2 or 3 of these consecutively. You'll get real comfortable on how to use those tools. Now, obviously, if you're publicly traded, to do it on your own company is absolutely one of the greatest ways to build your credibility, to build your career, and build your company. So let's jump into these earnings call discussions. So let me ask this now. The question is, when was the last time you listened to an earnings call? We're going to talk about earnings calls. Oops, let me close out that other one, make sure we're stopped sharing there. So here we go. My question is, when's the last time you listened to an earnings call? So not this webinar, but maybe your company's earnings call. Maybe it was a competitor or customer. You signed up to come and engage, maybe as a follow-on, as a graduate of one of our programs. But some of you are showing up without even have gone through the program. So when's the last time you listened to these earnings calls? Let's take a second on that. Going once. Going twice. When's the last time you listened to an earnings call? By the way, it's 100% anonymous. Don't worry, we're not tracking you here. Everywhere else in the world, they're tracking you, but we're not tracking. This is just to give you, get a feel for last time we listened. Going once, going twice. Let me go and close that. See how we did here. I'll share the results. Looks like 65%. You've actually listened to one this year. Excellent. Last year, it's been a while. Nobody said they would rather go to a dentist. I appreciate that. But about 16% of us said never have attended an earnings call. Well, folks, my hope is for those that have to maybe provide some resources that will encourage you to continue to listen to these calls. If you haven't, my hope is in the next 45 or so minutes is to inspire you enough to say, you know what? I'm going to listen to this gray-haired dude, and I'm going to actually put some effort towards this. And my guarantee is as you engage around these, you're going to see a bigger picture in your organization. You're going to see a bigger picture of your customers, your competitors. Here at Acumen Learning, we work with many, many great companies. In fact, we've had a chance to work with 34 of the Fortune 50, helping their employees understand how their companies make money, how decisions are made around the money-making process, but most importantly, what can they do to drive those results? As you look at business and financial acumen, it is really the keystone in helping employees to execute around their strategy. What we find is as working with some of these best companies in the world, is that their senior leaders are doing everything they can to squeeze a dollar out of the financial statement, create greater cash flow to reinvest in their company, or cash flow to pay down debt, cash flow to serve or get value back to their shareholders. What we find is working with their employees that they're functioning brilliant. You know more about your functional role than I would ever understand about your functional role. What listening to these calls allow you to do is once a quarter to step back for a moment. We're so focused on our individual area. Well, to step back once a quarter, make sure I'm seeing the big picture if it's my company. What are they focused on? What are we driving to? Then go back to your functional expertise and say, hey, what can I do as a marketing leader? What can I do as an operations leader? What can I do as an HR leader? How can I really drive the results of this company? That's what these earnings calls will allow you to do. And once you do 2 or 3 of them, you'll start to see the patterns your company's talking about. Once you can see those patterns, then it's real simple for us to say, okay, now let me go back. I know a lot about my role. How can I drive to their cash flow? How can I drive to our company's profitability, et cetera? Now, by the way, if you're in a sales role, I can't think of a better thing to do, especially if you're selling to publicly traded companies, to do this same assessment for sales organization. In fact, we do a whole program. It's called Building Business Acumen for Sales Professionals. And it's really helping them to understand their customer. Imagine you're sitting down with your customer after reviewing and assessing their quarterly report, looking at their risks, and you sit down with them and you say, let me tell, as I was listening to your call, here are the top 2 or 3 things that stood out to me. One of the risks you talked about was this. Let me tell you how our product or service will overcome that risk for you. Now, all of a sudden, instead of them seeing you as a salesperson to transact, they see you as a partner who really understands their business. So my goal is to inspire you enough to say, you know what, I'm going to take the chance of using this. Go out and use it 2 or 3 quarters consecutive. Either join us for the next 3 months, or you should have your Q1 numbers out already this year if you're annually focused. And Q2 are out as well. Your Q3 should be coming out at any moment. So you can jump back and look at those. Your Q3 would be the most recent if you're on a calendar year as a resource to kind of do that. So with that in mind, these earnings calls, that's what I want to talk about just for a few moments. These earnings calls happen on a quarterly basis. They're not required by any governing institution. Publicly traded companies are required to submit their financial performance here in the United States to the Security Exchange Commission. In Saudi Arabia, they're reporting that to their financial group, their trading organizations. So each group has to kind of report that information, get information back to their investors. They typically will take that opportunity to not just send that financial information, but have a conversation, communicate their strategy, give kind of a vision of what they're trying to accomplish. That's what these earnings calls are all about. As you look at this, let's see. Oh, I got it. Brian, excellent. Brian's given us some good kudos there. Thank you. Make sure you read Brian's comment in there. He actually did it, and it kind of describes how it's helped them. So as you look at this, 95% of employees don't understand company strategy. This comes from a Harvard business study. Here's another stat. 90% of employees don't understand companies' important business metrics. That can be challenging. As you look at a company the size of Saudi Aramco, and you're the CEO, Mr. Amin Nasser, and you're the CEO of this organization, which, by the way, was a national oil company up until 2019, then went public, selling a very small percent of it, but expanding kind of their investors. As you think about that, with some of those tough strategies, you have these earnings calls every quarter. Here's the question to kind of consider as you're listening to these experiences. You're the CEO of this very large organization. It's the world's largest integrated upstream, midstream, downstream energy company. When they talk integrated, that means they have all of them. For example, earlier today, I talked about ConocoPhillips. ConocoPhillips used to be a fully integrated where you had upstream, midstream, and downstream. But ConocoPhillips spun off their upstream. That's ConocoPhillips. Then they took their downstream and created Phillips 66. And that's where you'd have kind of your midstream and downstream companies. Upstream is exploration and production. You're getting the oil, finding it, and getting out of the ground. Midstream is processing and transporting. And then downstream is the refining, the retail. But it goes beyond that, right? Downstream is not just the retail, getting your gasoline and diesel. You got chemicals. You got plastics. You think about, just look around your room, all the things that have created. Most of them have been built based upon products coming from gasoline, from oil. And so that whole fully integrated upstream, midstream, downstream is what you would look at as a Saudi Aramco. That would also be an ExxonMobil, a Shell, a BP out of British Petroleum out of UK, and of course Total Energies out of France. These are major, large, what they call international oil companies that are publicly traded. So here you are, one of the largest as far as international oil company. And you're trying to help your employees understand your strategy. I'm going to geek out just for a moment, and I apologize for those. I told my colleague I was going to do this, and we'll see if I'm okay at the end of the course. We'll see how it goes. But here's, you look at cash flow. If you haven't been through a cash, all cash flow is cash flow that they generate right here, this line item right here. How much cash did they generate from their core business? Now, I pulled last year's number just to show you the size of them. So that's 2023. This is in Saudi Arabia. I think it's Riyal. Well, it says right here, Riyals right there. Saudi Riyals, their currency. But then they've converted to US dollars. Just to give you an example how big they are, look at this number right here. Last year, they generated $143 billion, $417 million of cash flow. Now, folks, just if you haven't ever been through a class, here's simply what it is. You take all the cash that comes in, actual cash dollars coming into the business from your core operations, minus all the cash that goes up for run your operations. So all their labor costs, operating costs. The difference between those two is how much cash is left over. So at the end, they had 143 billion. Just to give you an example, Exxon last year, 2023, I want to say it was about 35 to 45 billion. They're like 3 times that last year. Now, the year prior, the oil price was even higher, $186 billion. Guys, I look at about, I don't know, probably 100 different companies every quarter because we look at the companies we work with, plus their competitors, et cetera. These are off the charts numbers. Here's another one. If you look at the, oh, come on, where's my other slide? I'm going to break my flow here for a second. Apologize. Again, I'm getting a little geeked out here, but let me go back here. Where's my other screen? I'm going to just delete that one. I don't know why it's not playing the way I thought it was. Let me go back here, make sure I'm sharing my screen. I'm a little off. Let's see here, right here. Okay, so now I've got their income statement just to give you a feel for what's going on in this company. It's enormous. Look at these numbers. So $440 billion in revenue, okay? That's how much they brought in. The year prior, $535 billion. Now, folks, the largest revenue generating company here in North America, at least, is going to be Walmart. Walmart's over $600 billion. Now, what are they selling? They're selling a bunch of commoditized goods. So you got a lot of volume coming in. They're selling, at at 440 billion, 140 off. Just to give you an example, last year, Exxon was about 330, BP about 330. So they're doing, about 150 billion more. But the other thing about that is how much profit they're generating, 121 billion. If you did the math real quick, you take 121 divide by 440, you're looking at about 25% net profit margin. Folks, 25% net profit margin is like Apple. Apple computer is about 25% net profit margin. Folks, these guys are incredible. As far as what that tells you is how much they're charging for their product versus the cost, right? One of the things I remember working with a company and they talked about, you could go to Saudi Aramco, you go down Saudi Arabia, you drill maybe 600 feet and you got oil. We're here in the United States, we're having to frack, we're having to do all these things to get access to it. Their cost per barrel is very light and a very high price. They make great money. Anyways, okay, done geeking out. Let's jump back to where we're at. So one of the world's largest integrated oil companies. I just showed you some numbers off the charts as far as size, for sure. Well, what else? They have 73,000 employees. Now, most of those employees are there, but they have 60% of their assets in Saudi Arabia. But we don't always think about that. They actually have partnerships outside of place, even stuff in North America as well. So they're a bigger player than what we think. Obviously, the majority of their stuff is in Saudi Arabia. And here's some of where their subsidiaries are: Argentina, Australia, Austria, Belgium. I couldn't write all of them. There's a number of locations. So the real question is, and you think about these calls, the question you should be asking is, what does the CEO need their employees to know? What is it they need their customers to know? What is it they need their shareholders to know is the next one. And then finally, what is it they want all their partners to know? Well, that's what we're going to look at. Let's look at Saudi Aramco for the first half of 2024. By the way, their Q3 numbers come out November 5th. So if you want to do this and then say, hey, I'm going to give it a chance, go ahead and look on November 5th. They'll have their most recent information available to you. Now, folks, as we jump into the tool and the resources, let me just make a promise to you, a guarantee to you. As you think about this tool, if you we've done this, I've been working here for 14 years. Our company's been in business for 22 years. What we find is those graduates or those employees that take the tools, use them 2 to 3 quarters consecutively. There's something about doing it in order. It'll absolutely give you a bigger picture of this company. The outcome of that, it'll build your credibility. Imagine now you understand your company, and when you're talking to your manager, you're talking to your team members, you're able to articulate the why behind what we're doing. And as you're trying to make your business case, you can articulate how we'll drive our key metrics or measures. That's going to build your credibility. Well, if you can build your credibility, what does that mean? It's going to build your career. You're going to have more opportunities for promotion, more opportunities to impact the business. Then finally, if you're doing that, it's going to impact the whole company as a whole. Imagine if we could get all employees at Saudi Aramco being able to listen to their earnings calls, get the basics. What are we talking about? And then within their individual areas, go back and execute. That's how you make 73,000 employees really feel like a small business, agile, be able to execute around their strategy. Well, that's what I'm going to suggest this tool will allow you to do. Well, with that startup, let me go ahead and jump in. There's a 3-step process. The first step is you got to prepare, you got to analyze, and then you got to apply. So let me jump into the prepare phase. Real quick, we already talked about what happens or how often these calls are. They're every quarter. These calls usually consist of 2 parts. One is the prepared remarks. The second is the Q&A experience. The prepared remark is where the senior leaders kind of communicate around their key metrics and measures. And then the Q&A is where analysts who are tracking the stock get a chance to clarify their questions, et cetera. So they happen every quarter, usually somewhere about 45 minutes to an hour. So what are the steps to prepare? Well, the first thing you've got to do is you've got to locate the call. So let me do a quick, this is going to get recorded, so don't feel like you got to jot it all down. It's going to be recorded so you can jump in and just skip to this part. So how do you access the information? Easiest way to access, just go to this wonderful website we call Google. Look, it's all ready for Halloween here in North America. Halloween today. You just start typing in the company you want to look at. So Saudi Aramco, it's already guessing for me. Saudi Aramco Investor Relations. Let's go there. So it immediately goes to Aramco, and that's where I want to look. I typically start there because that's where I'm going to get the most information that I'm interested in. But I want their investor stuff. So I'm going to go right here to their investor section. I click on that, I get this page. Now you kind of scroll down, you'll see some things. So here's some information based upon kind of their stock price. You'll look at some first half of the year information. This is just summarized information that they provide for us, right? So that's all available to you. Well, I want a deeper dive than just that. So I'm going to click right here, their latest information. And every company you might look at is going to have a little bit of that information. So here's their Q2 information. You want their press release? You click right there. You've got their press release. It's right there. This is what they communicate, a quick press release they put out. If you want to get kind of their interim report where they actually walk through performance, this, by the way, is where you're going to get their financial statements. So you can see right here, we're at our financial statements. There's their PricewaterhouseCoopers guaranteeing their results. Right there, there's their income statement, balance sheet, etc. You can also get their presentation. I love the presentation decks because there's a lot of information that's kind of captured in those presentations, kind of bullet point what they're talking about. So here's their CEO. Here's kind of his bullet point messages, what he wants the market to take from this. And then their CFO, he kind of jumps in the numbers, a little more detail there. So great resources. That's how you access it. Okay. Now, some clients will also do a transcript where they actually capture the words. This transcript's a little hard to access, to be honest. I went to a number of kind of third-party websites. My favorite is Seeking Alpha. The other one I use is Motley Fool. These are great websites where they'll do a word for word. I actually had to transcribe it using it was just in Word. I just had it transcribe it for me to get that transcript. But you can listen to it. If you want to listen to the actual replay, click right there and say you accept. Launch right there. I don't know if you're going to hear that. I'm not sharing my audio, but that's the recording. You can actually listen to it right there. Okay. Well, that's how you access. So the first step of the activity is you got to go locate the call. Okay. Locate the call. So the second step, you're going to then go and you want to review your notes. You might say, well, Brent, what notes are you talking about? Well, obviously, if you haven't done it yet, you may not have any notes. But if you look back to where we were looking on their website, I could jump back to Q1 or actually do the first half of the year, what we're doing right now, and review, just do a quick review of that if you wanted to. I typically don't. I may jump to their annual numbers from time to time. But for me, I'm just going to jump into the next one. That being said, once you've done this activity, your notes from the prior quarter become the notes you review because they're going to communicate to the market. Here's what we're going to do. And then here in Q3 and November 5th, for example, you could compare what I'm going to share with you right now, the first half of the year, with this is what they said they were going to do. Okay, let me see, did they actually do that? And so that's why you review your notes. The last thing I'd recommend is do it with a team. I think it's a great thing to do. If I'm a leader, bring my team together. If I'm not a leader, just ask my manager, hey, do you mind if we just do this together? I'd love to review this. Now, some may say, hey, taking a full hour might be too much time. Okay, you do the assessment and just share it with your colleagues. You can get a colleague to come and do it with you. In the end, what you find is by doing it with two people together, at least, you can kind of bounce ideas. Here's what I hear. Did you hear the same thing, et cetera? So it's a great way to kind of capture what's going on. Well, folks, that's the prepared section. Let's jump to the analyze section. Now, this is where the meat, this is the heart of what you're trying to do. You're trying to get a strategic focus of the company, and then what I call keep score. See how we did on our scoreboard. The scoreboard for me is the financials, and then be able to see what the strategic goals and objectives are. In order to do that, let me give you a simple framework what they use in the class, and I'll have a few of our colleagues jump into the chat box, if you would, as we do a quick review for those that haven't been there. Oh, Stephanie, good feedback. I will slow down, Stephanie. Thank you for that feedback. So let's go to the 5 drivers here: cash, profit, asset growth, and people. So let's talk about cash. Cash in a business is vitally important. In fact, fill in the blank for me. Cash is put in the blank. King. Absolutely, Alexandra. In fact, some will say it's the oxygen of a company. So one of the drivers you're going to look at when you're listening to these calls is, what are they saying about cash? Are they talking about a source of cash, stuff like issuing stock, the cash flow they generate in a given period, or a use of cash, using that cash to buy a new piece of equipment, what we call capital expenditures, or being able to use that cash to pay down debt. to get value back to shareholders. Cash is vitally important. So one of the things you listen to these calls, listen for what are they saying about cash. Now, when you talk about profit, there are two levers that impact profitability. And so I use those levers as ways to determine what are they talking about. So in the chat box, if I want to grow my profitability, what are the two levers I have? I can increase something or reduce something to grow my profitability. What were those levers? Leo's helped us with this one. We want to lower our cost or our expenses. Absolutely. That's a very common expression that many analysts, or excuse me, many executives will talk about. Expenses. While increasing my revenue, also known as sales. Absolutely. So those become the two levers I'm listening for. Are they talking about cost or cost management, inflation? I'm going to think profit. If they're talking about pricing, volume, revenue, sales, I'm going to think profit as well. Well, balance sheet, it's anything you own or control which has value. Will you put in the chat box anything you own or anything? As you think about Saudi Aramco, what would you guess they own or control which has value? Put in the chat box. Equipment. Now, brand name, interesting enough, brand name is recognized, Leo. That being said, brand name won't be on their balance sheet. Now, if they were to sell to another company, which wouldn't happen because it's government owned, but if it was to be sold, then that would be a value, the brand reputation. But facilities, leases, absolutely, reserves, they have cash. They have receivables. They have inventory. These are all example of assets. When you think of assets, I'm listening for, are they buying new assets? Are they expanding in different geographies? Are they building new partnerships? In the end, those drive growth, but they're also driven by assets. You think about cash and profit. That's really what the company's driving towards. How do they do that? Well, it's through their assets. Their assets help them to produce more profitability, more cash. What is it they want to grow? They want to grow their cash and their profitability. And who makes it all happen? It's the people, whether it be the external customers, those that are buying or using their products or services, or their internal customers. That would be their colleagues, their peers. How well does Saudi Aramco's teams come together to get greater execution? Well, folks, that's the simple framework as you start to look at these tools. So let me introduce the first tool. The first tool is called the Executive Alignment Tool. With this tool and any executive communication, you can quickly get a focus or a feel for the key messaging the executives are trying to make. Then from there, you say, okay, based upon what I heard, what should I do about it? Let me explain how the tool works. It's just using those 5 drivers, right? Being able to listen to this communication or read the communication. You may get an internal email sent to you where executives are sharing their strategy, their quarterly performance. It may be the earnings call you jump on where you receive this. Sometimes on an annual basis, the CEO sends a letter to shareholders. That could be a tool you could use this tool to review. So here's how it works. As you listen to or you're reading the call, what you're listening for are any words that correlate with each of these drivers. Now, some of you might say, Brent, I get that, and you did a brief review, but this is my first time listening to this. Well, that's okay. In the tool itself, it's going to give you a definition of cash. We all know what cash is, but we may not know what cash and cash equivalent is, cash flow, etc. So it's going to give you a little definition of the key metrics. From there, it gives what I call trigger words. When I hear these words, I'm going to know I'm going to put cash down. Some of those trigger words you'll see on the screen, any dividends or distributions, that's a use of cash. Stock buyback, that's a use of cash. Debt or borrowings. All the issuing stock, capital expenditures, that's a use of cash. So I'm listening for those words to access those numbers. And it does it on every single one of them. So if you're new to this, we give you a definition on each one. We also then give you some examples to look for. Now, when you're doing this calculation, the first thing I would share with you, and if you took our course, you'll remember this, that this is not an exact science. we've got, over 100 people on our call today. And if we were all doing this reading of Saudi Aramco's communication, we would not all get the same slash marks. That being said, we do about 1,100 to 1,200 sessions a year, different companies, different industries. And what we find is that invariably, as a group, the top 2 or 3 drivers will rise to the top. And so it gives you just a simple framework of where they're focusing. Once you've done that, then you answer 4 simple questions. Which business drivers seem to get the most attention? I love the second part of that question, and why. Think about who they're communicating to. Think about what's going on around them. What's the political landscape? For example, go back to COVID. In COVID 2020, oil was the first time ever where it was sold it was in negative territory for the first time ever. That's a big impact to the company. So that's going to impact what they communicate to the market. From there, what were the 2 or 3 key messages the executive was trying to make? What are their goals, trends, and objectives going forward? And then finally, what key questions or concerns did the analyst bring up? Now, the reason I like this question is the executive team communicate to the market. In fact, there's a disclaimer as they start their communication saying, look, we're giving you our best information now. We're not going to update this, etc. In the end, listening to the analysts ask questions, you get the feel for, are the analysts buying what they're saying, or they feel like maybe there's something else going on. It helps you get a feel where the market potentially is going to agree with what's being communicated, or potentially feel like they're not giving correct information. So I love that to kind of level set. Are they aligned with what's communicated, or they question it? Helps me to think about what's going to go on with their stock price. And that's one of the last things you can do is quickly just do a look after we've done a call, see what happens, why it goes up, why it goes down. Now, be careful when you look at that. That's not exact science either. Just because it goes down in a year they're performing very well, the whole market could be going down based upon inflation or other challenges in the market. But you can look at that as well. Well, folks, so what I want to do, we've got about 30 minutes, about 27 minutes left, is I'm going to go ahead and start walking through this tool with you and show you how to use it. So what I've got is I've got 2 quotes, one from their CEO and one from their CFO. And what I want to do is in the chat box, using the 5 drivers, as we read through it, you just put in the chat box, which of the 5 drivers are you hearing? Now, by the way, you may hear one statement where more than one driver is being talked about. For example, right here, it talks about capital expenditures. If I hear a company talking about capital expenditures, that's going to be cash because it costs them money to produce that capital investment they're doing. But when they're investing in those assets, that they're going to see an increase of their assets. They're also, the fact they're doing capital spend, they're going to grow their assets. So you can have one statement where it has multiple drivers. Okay. So with that in mind, let's go ahead and jump into the first quote. Here it is. Mr. Nasser communicating to the market. He said this: let me start by saying that Aramco continues to deliver a strong performance both operationally and financially. In the chat box, which drivers come up? That one's not as easy. It's kind of a broad one. Strong performance, could look at growth maybe, but not a whole lot there yet. Let's go to the next one. Growth in oil demand. What driver are we looking at? Put in the chat box. Growth in oil demand is strong, reaching a record 103.2 million barrels a day in the first half of 2024. 103.2 million barrels a day. So you're going to see growth there, right? You got growth, but boy, if I'm growing, I'm going to see revenue increase, right? As they sell that. Assets, they're driving towards assets. Interesting enough, I think Saudi Aramco is somewhere around 10 to 12 million barrels of oil per day. So that gives you how much they're producing of the global demand. Here's the next one. Despite some headwinds in certain economies, we expect further demand growth in the second half of the year. What driver are we talking about there? Yeah, it's pretty easy when they actually put the word in, right? Well, let's go on. We remain focused on our long-term vision and shareholder what driver value, and believe that a successful energy transition will require a variety of energies and technologies. What drivers in that statement there? Put in the chat box. Yes, James. When we talk shareholders, that's going to be an external people, those that own our product or service is absolutely going to be there. This whole thing about energy transition, basically they're shifting towards a lower carbon footprint, things like solar, wind, hydrogen, a number of investments they're making. In fact, by 2050, they have some goals like many companies. Net zero by 2050 is a big emphasis. So they talk about it's basically asset transition, maybe some growth that you would look at as well. I'm pleased that we continue to progress on our goals and upstream. We continue to strengthen our liquid and gas capabilities. What drivers would those be? Tapping into our fast reservoir. What would reservoirs be to help ensure a reliable supply of low cost? What driver low cost? And low emission energy for decades to come. In there, I see a few of them. Go ahead and put in the chat box. What do you see? Yeah, Tom, we've got assets, we've got profit there for sure. I see liquids and gas. That's a big one. Liquids to gas is a big emphasis they're doing. Growth is in there for sure. Reservoir, that's going to be an asset type thing. Low cost for me becomes a arena as well, kind of that profit driver. Well, folks, that's how it works. Well, let's do one more. Just in the chat box, kind of scan through this and put in the chat box. Let's get as many of you as you can. What do you see being communicated by Zayad, their CFO? Which driver? Put in the chat box. Yeah, where would stability be? That's an interesting one. Yeah, that's going to impact growth for sure. We see some words around growth. A lot of growth in there. Look at how many times you just even see the word growth. Yeah, assets. How are we deploying our assets? Where are we expanding? Look at the, they got demand in China. Additional 1.4 million barrels. So we're at 103 million per day. They're saying it's going to go to 104 and change. Excellent. Yeah, you got a lot of growth in there. You got some profitability in there, some assets in there, etc. Well, folks, that's how it works. Now, imagine if you read the whole call, or at least their communication, you'd quickly get a feel for what they're talking about. So then you go back to the tool and you do something like this. Now, this may be what it would look like, right? As you went through, maybe you had a bunch on cash, maybe you had, but definitely growth was pretty high. We saw a lot of growth there. We saw some profit, and you saw some assets. People was even pretty high, right? So you look at these and then you go through and answer those questions. So which of the business drivers seem to get the most attention and why? What are the 2 or 3 main points the executive was trying to make? Where are their goals and objectives going forward? And then the last question is, what are the analyst questions? So let's jump in. What I'm going to do is I'm going to just quickly walk through as I've completed it. Now, again, you may see it a little different based upon your role. Maybe you have 30 years in oil and gas. You're going to see stuff that maybe I don't see. In the end, it's about just trying to gather as much information and then make the best decisions you can. For me, the driver of focus was definitely growth, whether it's growing through their assets, how much cash they're getting, the cash they're bringing back, renewable energy transition. There was always a focus around growth. And you saw it in the communication they talked about. Some of the quotes we just said. Oil demand is growing. Global inventories are not as high as they once were. So if supply's going down, demand's going up, you're going to see that that price per barrel maintain or potentially go up. So Mr. Amir kind of commented around this, around growth, delivering near-term performance and long-term strategic milestones, record global oil demand. Further growth expected in the second half of the year and beyond. Continue to deliver around their milestones. What are their milestones in upstream? This idea, enhancing liquid to gas. Big investment there, moving from liquids to gas. Further integration of that liquids to gas downstream. And advancing renewables, blue hydrogen, and carbon capture, etc. In fact, he gives a little summary of each of them. What's going around upstream, what's going around downstream, and what's going around new energy, kind of those 3 pillars of focus. So again, how do we expand? How do we grow? How do we make this transition work? He kind of highlights that strategic milestones. So generate tremendous profit and cash was a big reason of focus around growth. Not only do they generate a lot, they paid a lot out, getting value back to those investors. They then take that cash and they're also spending it on major projects, capital projects and assets, and look at how they're going to manage the growth potential they have. This comes from their CFO delivering value back to those shareholders. Make sure that they're getting that value back to shareholders. Remember, they were a government-owned entity up until 2019. They went public in 2019 to show that value they get back to investors. Pretty significant. Just in Q2 alone, dividends were about 20 billion in just Q2 alone. Pretty significant impact. Actually, 31 billion. They have some of it their Q2 performance, but then also performance dividends that they have. So growth to meet rising energy demand was another focus they talked about in preparing for the energy transition. So why are they focused on growth? Well, they're in the heart of a growth. You got high demand going up and you got supplies potentially going down. All this cash is being invested there, as well as the whole industry is doing the energy transition. So you see that happening as an organization. Well, what were the 2 or 3 main points the executive was trying to make? There's probably more points, but the 3 that stood out to me is this idea of record profitability and cash flow. Very strong in the quarter. Not only then, but the last couple years have been very strong. So where's all that cash and profit going to go? Well, continue investment in their assets. They're trying to expand, and rather than just be a Saudi Arabia player, go beyond that, become this global presence. And so they have various investments both within and outside of their organization. A big emphasis of their growth and their assets are going to be around gas production. And then the whole energy transition, whether it be solar, hydrogen, carbon capture, they're playing a big role as a company. So key message is, hey, got strong profitability. We're growing our assets to meet the energy transition. So what were the goals and trends, objectives going forward? Number 1, expanding production capacity. Again, that big emphasis on the gas focus of that. Enhancing downstream integration and value. Aramco is increasing its downstream integration, expanding its high-value markets, focused on crude to chemical conversion and retail growth. And then finally, commitment to energy transition, decarbonization. Aramco investment in renewables, hydrogen, carbon capture support their global shift towards sustainability. So they kind of talked about all their goals around what they want to do coming forward. And that's really in this document back here where they give a little overview of where they're spending, what they're doing, et cetera. Well, the last question is, so what were the questions the analysts? Really a lot of questions around different investments. When are they going to come on service? When are they going to happen? You think about it, when you're doing capital investment, you got a lot of money coming out. You don't actually generate cash until it actually comes back. You have it into service. So there's a lot of questions on the Jafurah phase 2 opportunity, as well as some of these international investments they're looking at. The other thing they talked a lot about is they have very low debt. There's a very common calculation, current ratio, where you take how much current assets do they have in relationship to their current liabilities. Basically, they're in a very strong short-term perspective. They have plenty of cash available. In fact, their gearing, debt to capital, is a negative number, meaning they have more equity, more cash available than they have debt. So they're in a very strong financial position. So the market is saying, well, what are you going to do with that? Now, most large companies, they want to have a little bit more risk taken and have a decent amount of debt. Although Saudi Aramco just did some new debt in Q2, they've got a very strong balance sheet. And so the market's really questioning, well, why are you holding on to so much? Why don't you get more back to investors and or use the strength of your balance sheet to access debt to fund their growth? And right now, they're not doing a lot of that. So that was some of the questions that they had asked. So folks, at this point, we've covered the kind of the tool. The question would then say, okay, so what do I know? Significant amount of cash and profitability being generated. It's a great company. When price is high on oil price, you're generating a lot of cash. Their cost structure is very strong. Like I said, about 25% net profit margin in 2025. So strong financial stuff. That we got this big transition. The question would be, so how do we impact that transition? What can we do to drive that transition? How can we get these assets that we're investing in to deploy? Those are some of the strategic goals and objectives. Well, the next step would be, okay, now let's see the scoreboard. Let's see how they did from a scoring perspective. And that's where this tool comes in. The second tool that we're giving you is called the Navigating the Financial tool. Brian, gearing ratio, depending on how they're calculated, is typically it's a utilization ratio. It's like a debt to equity. So you take your debt in relationship to your equity ratio. I'll go in and I'll put it at the end of the break. I'll pull their actual calculation for you. But a gearing ratio is just a utilization ratio. And it's a very common example that we would use in the United States is like a debt to equity ratio. But I can give them the exact one a little bit later, Brian, if you'll stay on. Okay. So let's get to the numbers. What you'll notice is right here, we have the 5 drivers that we used in the course and that we just reviewed as a framework. What I'm giving you in the tool is the most common metrics as well as equations to calculate those metrics most companies would look at. So these are the most common. Now, if you really wanted to look at this company, you may want to look at some specific metrics to them. For example, they talked about EBIT, what we call operating income. If I was calculating for them, I'd probably look at operating income. But this tool is to be used in any company. So these are the 10 most common metrics you'd look at. Now, the genius of this tool, in my opinion, is right here. It's there where you go to look in the statements. For some of you, you've never gone through a course potentially where you had a chance to look at statements, or it's been a long time since you were in university, right? Well, don't worry. It tells you where to go to find that. As well, if there's an equation, it's going to tell you how to use this. So here, we're going to do a few of them. Then I'm going to show you the answers. We'll complete this, and we'll jump into our applying section, okay? So let's go ahead. Well, let's start with this first one. We want to get our cash and cash equivalents, and just engage with me through the chat box if you would. Where are we going to go to find cash and cash equivalent? What statement am I going to go to based upon this tool? What statement are we going to go to based upon this tool to find cash and cash equivalent? Thank you, Stephanie. Gabriella, excellent. Absolutely. Want to go to that balance sheet. So if you're not, you're kind of like, how did they get that? It's right here. Tells you where to go. Now, there's no calculation here. All I've got to do is go and find it. Now, you don't have the statements in front of you, but I do. Here we are. We're going to do it in USD, so US dollar. We're looking for a line item called cash and cash equivalent. Now, if you're a US-based company, it'd be right at the top. International company, it's going to be it's going to be towards the bottom of their current assets. When you see that number, put in the chat box. As of June 30th, how much cash and cash equivalent did Saudi Aramco have on their balance sheet? There you go. 45,548 million. You'll see it's a little bit of dip, a little bit of drop from a year ago this same time. Now, if you wanted to do more research, you're going to say, well, where did that cash go? What you're going to see is they made a lot of investments in their capital projects, as well as some significant distributions. Significant amount of their distributions go back because that actually funds some of the governmental operations at Saudi Aramco. So anyways, you plug that in, you got the first one. Look at that. We're assessing the scoreboard, navigating the financials. So let's go and we want to do the cash flow number. What statement am I going to go to based upon my tool? Put it in the chat box. If I want to find the cash flow from operations for a company, what statement am I going to go to? Excellent, Brian. Thank you. Our cash flow statement. Here it is. Again, we want the USD numbers. And I'm looking for net cash provided by operating activities. This section starts with their net income. Then they convert it to cash. And I'm going to do, actually, we're doing the quarterly one. Let's do the quarterly one, okay? So right here, Q2, USD, how much cash did they generate? Net cash provided by operating activities. It's incredible numbers, by the way. This is one quarter. 31 billion. Right here, 31 billion. 90 million cash flow. Now remember, this is the difference between all the cash that comes into their business minus the cash that goes out. Really strong performance. Absolutely. 31 billion, 90 million. Well, let's do the last two and we'll do one calculation. So we're going to do these three together because basically once you get this number here, you're going to have this one. And once you get this number here, you're going to have this one. So let's go through and do those together. So I want my total revenue. What statement? It's the last statement we haven't looked at. total revenue, income statement. There you go. So let's go to income statement. We want our revenue. Again, we're doing the quarterly numbers first. We'll do the year to date in just a moment. So I'm looking for revenue. Now, they have two sets of revenues. They have revenue, but they also have their other income. We're going to use their total revenue number, revenue and other income, because they have some partnerships where they own less than 50%. They generate some income that comes in as other income, but that's then cash or it's income they can use to run their operations. So how much total revenue did they have for just Q2 of 2024? Put in the chat box. There you go. 125,497. Okay, while we're here, just to speed up our time, let's get our net income, because that's the other number I got to get to. Now, when the company does their net income, here's just the net income that they generated without any partnerships, but they have to give what they call their non-controlling interest. So the one I want you to use is right here, shareholders. So this net income attributable to their shareholders, how much do they generate? There you go, 28,309. Okay, so now we have the two numbers. So here you go. Here's the 125,497. Then we go back. Here we go. We got the 290. Oh, I didn't. I had you do this one. I forgot. I did the main one. So we did this one. Go ahead and do the 28309. Here's what you get if you do the 29070. It's 23.2%. Somebody, if you would, take the 28,309 divided by the 125,497. Multiply that by 100. Tell me what the answer is. It's going to just be a little bit different than this number. Great question. So the questions asked is, why do you only limit the shareholders? So you don't have to, especially where those numbers are so close, okay? We're talking 29 versus 28. But when an investor's looking at it, they're looking at what's the shareholders, because they're making recommendations to the shareholder. What portion did they have rights to? So they're looking at their portion of the shared value. The non-controlling interest is basically partnerships that own less than 50% of Aramco. But they also, we have to allocate, well, what part, basically this number right here is how much did Aramco generate? Well, what part is allocated to their shareholders and what portion's allocated to their partners? That's what we're looking at. So you look at the number, we're about 22.5 is the number there. So the two different numbers you could have would be 23.2 is the higher number. But when we do the lower number, it's 22.5. Now, what does that say? That says for every $100 Aramco brings in, they generate about $23.20 of profit as a whole organization. Their shareholder portion of that would be $22.50 for every $100. Great question, Matilda. Okay, so here we go. Here's the answers. We didn't have time to go through them all, but you can see it's just adding and subtracting. You saw how to access them. So if I gave you the financials, what you'll find is in about 10 minutes, you could complete this and get their answer. Now, what you always want to do then is compare it to a prior quarter or prior experience. Now, what I've got here is I jumped to the year to date. So here's for the first 6 months. Look at that number, how much they generated in cash flow. Look at their total revenue for the first half of the year. Significant numbers, right? Then you come over here. Here's our comparison year over year numbers. Pretty flat on the years, but much more cash flow last year. Margins were also up last year. Well, folks, you could use this tool, not just looking at Aramco, but you could look at it at a competitor. You could do this year-to-date Aramco versus Exxon. You could also do it in correlation with any company, just to see how one industry is similar, one industry is different. Well, folks, that's the analysis phase, okay? What do I know now? Well, not only do I know what they said about their financial performance, I can see in their numbers, they're absolutely legit. These are incredible numbers. So very strong performance. I also see how much they're investing in their shareholders. So I see a lot of cash going back to shareholders. I can look at that and all the financial information. Now, the question is, so what do I do about it? If you get to this point and you say, that's kind of interesting, that was fun, but you don't do anything, we've wasted our time. We had a chance to, the core thing about Acumen Learning's training is to make sure we do something about it. 34 of Fortune 50 are companies we've had the wonderful opportunity to work with. And at one point, one of our clients did a assessment to see what sort of benefits people get from a course like this. Here's the benefits you can get using these types of tools. Improve performance of our business and function, increase collaboration, improve upward communication, improve employee engagement, increase business focus, and improve teamwork. That's the outcome. In fact, they found a 300% return for investing in this type of learning. So the question is, what are you going to do about it? Now that you get that information, how do you apply it? That's the last part of the tool. To know and not to do is not to know. To know something and not do anything with it, it's a waste of your time and effort. So the last part of the tool is how are you going to take this and apply? It has three simple activities. The first is identify what were some of your new insights as from going through that exercise. For me, just the size of them. Now, I look at them periodically, but it's always fun just to look back and say, wow, this is just, it's a juggernaut of a company, how much they generate, significant size of the company. Best in class around key metrics. If you were to put them head to head with an Exxon, a Shell, a BP, and please, with those companies, I'm not condemning any of them. They have significant top of class metrics or measures, the volumes, et cetera. Now you'll actually see Exxon and them will have in the 20s net profit margins. They'll get some good margins, et cetera. It's just the size of it is much different. One of the things that was interesting in this, I've done a look. I've looked at them for years, basically since they've been public, tried to access their information at least annually. But I forget it. I always think of them as Saudi Aramco, Saudi Arabia. That's what I think of. And that's where a majority of their assets by far. That being said, I see all these efforts. They're involved in a Port Arthur second phase. They're doing stuff internationally. So they're really becoming a global presence versus just a Saudi Aramco play. So that was interesting to me to see the global presence. A couple other things that stood out to me: balance of national investor expectation. This is a very unique company, right? It's been a national oil company. 82% of the company is owned by the government. Then there's another fair portion that's owned by the government's investment group. So really, the majority of it is still a national oil company. I think it's only about 2% that are outside of kind of the national groups that have connections to national groups. So there's a real, how do you balance that? For example, many of us remember earlier this year, Saudi Arabia went to Aramco and said on some expansion, they were going to get to like 13 million pounds a day capacity. Correct me if I'm wrong. Many of you will remember this, but they make that announcement. The whole market dropped, by the way. The oil industry got hit. They still, 12 million a day is still pretty significant capacity, right? It was extra capacity they were working towards. But they made that announcement, which all of a sudden if you were a supplier to them, you probably felt pressure around potentially some of the projects were put on hold, et cetera. So that balance between national versus what an expectation of an expector. The fact that very little debt as an investor, if I was an investor or could invest with them, I would expect them to leverage their assets, get access to even more cash, and let's fund even more growth and more expansion of the company. So that balance is a challenge. And then finally, positioning for energy for transformation was a key insight. So what would I do? This is the most important. What would I do? Now, me as a consultant, as a facilitator, I want to go look at their numbers versus the Q3 numbers versus all the other majors and see how they're performing, just to see is the whole market, where they're at, et cetera. I want to share my findings with our consultants, clients, and other new customers. And if anybody here on the call today is from Aramco, man, I'd love to work with you. Give me a call. I'll give you my cell number. I'd love to work with you. Let's see if we can help build that business acumen of your team members and help them make better decisions. The last part of the act play is this. Once you've done this, go have a conversation. If you've looked at your own company, go talk to your manager. Here's what I'm seeing. Here's what I think I should do. Make sure you get that alignment. If it's a customer or partner, let's talk about how we can differentiate ourselves from a sales perspective. If it's a competitor or benchmark, how do we continue capture market share, et cetera? So go have conversations with different groups based upon who you're looking at is the last part. Well, folks, that's the tool. So here's my last question. We'll wrap up giving you the tool here. Remember, once you've done this once, the review phase is basically reviewing the notes from this tool. So here is the tool. We'll put it in the chat box. Go ahead and download that. It's a tool that will walk you through how to listen to an earnings call. When you download that, also register for the next one. Our next group is coming out on November 26th. You'll get a chance to listen to our next earnings call. Also, you'll get access, if you want a deeper dive on this, a quick review, we'll give you access to our self-paced online for $100 off. I think it's like a 33% discount. So it's a great way to get a nice refresher. If you're in a management role and you say, you know what, I'd love to do this with my team. I'd love to do this on our company. Well, reach out to us, acumenlearning.com. We'd love to talk with you, show you how we can help build your credibility, build your career, and build your team's company. Thank you for your time. We'll stay on. If there's any additional questions, we'll get back to, we'll answer those. So the calculation, I'm not seeing in a quick search exactly how they do that, but the debt to equity ratio is typically what the gearing ratio is. So total debt is going to be all their short-term versus long-term debt, all of it. They'll average that. So just take the total short-term, total long-term debt for 2 years, average that, and then divide that by total equity, and that will give you their gearing ratio. Basically, they're so strong on their equity position. They have way more equity than they have debt, and so it actually will show a negative number. So their debt in correlation to that is negative. They have less debt than they have gearing. I'll just copy this formula here for you and put in the chat box. Maybe that will help you. Now, sometimes they'll bring certain things in or out to look at that, but that's a typical way to look at that. Let me know if that answers your question, Nicholas. Thank you very much for your time. Folks, we'll let them go.